Okay, let's take a look at this problem. They've given us the comparative balance sheet. They've given us the income statement. They say prepare a statement of cash flows using the direct method for the operating section. So let's dig in. Cash from customers, that's always the first category. Cash from customers starts with sales, 660, plus beginning accounts receivable, minus ending accounts receivable. So that's 660 plus 160 minus 157. So cash from customers totals 663. So we can fill that in. Cash from customers, 663. Sales plus beginning AR minus ending AR. Now we have to do cash out to suppliers. So we have our cost of goods sold plus our ending inventory. And our ending inventory is 159 minus our beginning inventory, 155. Plus we also have to consider our accounts payable. So we're going to pay our beginning accounts payable. So that's plus 52 minus our ending accounts payable, 48, simply 48, excuse me. And when we add that together, the cash paid to suppliers, that totals 308. Cash out. Now, salary expense, cash paid to employees is salary expense plus our beginning salaries payable of 8 minus our ending salaries payable of 4. So cash paid to employees, 96. Depreciation expense, because this is the direct method, we can just ignore. Interest expense is we start with interest expense. We add our beginning interest payable of 6, because that's how much we spent, but we didn't pay the ending, which is 8. Okay, so our cash paid for interest is 18. Loss on sale of land, we may have to consider that down the road a bit. And our income tax expense is 98 plus our beginning tax payable of 14 minus our ending tax payable of 9. That's 103. So let's fill in those numbers while we have them. So cash paid to suppliers, we said that was 308. Cash paid to employees was 96. Remember, these are all cash out. So these are all negative numbers. Cash paid for interest was 18. And cash paid for income tax is 103. So we put that all together. We take the 663 minus 308 minus 96 minus 18 minus 103. Our total cash from operating activities, 138. Now, let's handle some of the other things piece by piece. Land that was originally cost 27 was sold for 24. This is statements of cash flows. Sale of land, 24. Okay. Purchase of short-term equipment of note, 37. That's cash out. And new equipment was purchased for 185 cash. Again, cash out, 185. So that gives us our total cash out of 137 plus 185 minus 24, cash out of 198. Let's see what other additional information they have given us. So we're done with this, this, and this. $37,000 note, long term, goes to our capital structure. That's financing. So $37,000 out. We paid the note. The sale of a bond payable, 74. We sold those. So that's cash in, 74. Sale of common stock was at 60, was par plus 30 additional paid in capital. It's a statement of cash flows, not a statement of shareholder equity. 90 grand is 90 grand. We don't give a damn where it came from. And we paid cash dividends because they told us that. 55. That's cash out, 55. So 37, 55. Net that all out. 164, 165, 72. Cash from financing activities. So 72 plus 138 is 210 minus 198. Our net increase in cash was 12. Our beginning cash was 115. And our cash at the end was 127. Now let's go look at the balance sheet and see if it is. Praise the Lord, another miracle. It is indeed 127. Pretty complete statement of cash flows. Took you through all the pieces.